Hello, my name is Steve Wolbach, and I am known as your friendly public adjuster. I have been in the industry working on my sixth year now. I have helped many people along the way. I've seen a lot of different things happen when they enter into a claim, and I've seen what's happened when they don't get the help of a public adjuster. Public adjusters very much do serve a purpose to help the homeowner during the claims process. One of the main problems that I have seen that the homeowner sometimes is difficult for them to realize is that the insurance companies are not their friends. And I understand why they feel this way. I mean, we're bombarded with advertisements, the marketing campaigns that are put on by the insurance industry is unequaled. They do a great job, I have to admit. There are hundreds of millions of dollars spent every year telling us how they are our friend. Why would we not believe them? Well, because of the position that I'm in, I get to see firsthand, up close and personal, that they are not. You need to put things in perspective. Well, how do we do that? Let's first analyze the insurance company. Speaking of the insurance company, what do you think their main goal is year after year? Their object is to generate as much revenue as possible. And how do they do that? Well, they write policies. Every time they write a policy, there is a certain dollar value premium that is associated with that policy. When people pay the premium, they get coverage for their property, and everybody's happy, right? Well, that sounds good, and it starts out that way. Now, let me ask you, how, if we know how insurance companies generate their revenue, how can an insurance company lose their revenue? Well, simply, every time you as a homeowner have damage to your property, if you were to call and file a claim with them, that puts them on the hook now that there's a possibility they're going to have to pay out on that claim. That's how they lose their money. Now, keeping that in mind, let's go with this here. Stay with me. That when they pay out money, where's that money come from? Obviously, it's coming from their profits. They don't just make this money. It's not like there's some magic room that they place a call in our company there and listen, can you please make up $27,000? I need to pay this for a certain loan, and they're going to generate that, and then I'll stop by and pick it up later this afternoon. No, of course not. It comes from a check that's being drawn on their checking account where their funds of the profits are. Now, who benefits from this? Well, the homeowner does, right? Because now you are being reimbursed for the loss that you've just suffered. This is what we call making you whole. While doing that, unfortunately, the insurance company is giving away some of their profits. So, if I can use the term their business model, they're not designed, or let's rephrase that. Their motivation for being in business is not paying out on claims. Their motivation is writing policies, generating premiums, and then posting record high profits. Now, who gets to see that? Who benefits from that? Well, with the record high profits, number one, that makes that company's stock extremely attractive to an investor. Now, you as an investor, looking at the different stock that's traded on the market, on the stock exchange, would you be going and purchasing stock from a company that looks like they're just barely holding on by the skin of their teeth? Or would you want to buy stock from a company that has now posted and has paid not only quarterly dividends, but posts annual bonuses and record high profits at the end of the year? Well, obviously the answer is the company that pays out the dividends and the record high profits. Well, they can't do that if they treat you fairly. They have to make a decision. Do I want to take care and satisfy the needs of our clients, the people that have purchased insurance policies, and at their time of need, when they have damage, do we pay them fairly, or do we go and save the money and keep that to pay a portion for quarterly dividends and to make our stock as attractive as possible? We want to make our shares be as advantageous to be purchased as possible. So by doing so, that helps bring more money into the company that we can invest into other areas. That's the business model of an insurance company, to generate as much capital as possible so that they can invest that capital into different areas, again, to generate even more money. The bad part about this is the homeowner or the business owner, because you applied to this as well, you're part of all this, you end up getting the short end of the stick. You end up getting hurt with a settlement coming from the insurance company. When they indemnify you and they do not pay you fairly on your damage, you suffer. Hence the public adjuster. We come in, we have the same training, and believe it or not, at times we actually have more training than what the insurance adjuster has. The nice thing is, there's an insurance policy that needs to be represented during a claims process. There are two sides to that. The one side is representing the insurance company's best interest, and that's what the insurance adjuster does. He looks at the insurance policy and makes his interpretations, and he makes certain decisions guided by how will that affect the insurance company at the outcome. A public adjuster looks at the insurance policy, looking at the damage, and now represents this to have the maximum benefit paid towards or to the homeowner. That's the difference. We are looking out for the homeowner's best interest, as the insurance adjuster is looking out for the insurance company. Now, you folks out there, you work for a company. Don't you want to see that company succeed? Don't you want them to have record profits, to have additional sales every year? When that happens, isn't there a possibility that some crumbs will trickle down to you as an employee? Of the very least, let's say that you don't get a promotion. Let's say you won't get a raise. But the fact that your company is moving and growing and so solvent and stable with its returns that it's gotten, at least that helps for job security. Wouldn't you agree? You know that the company is thriving, there'd be no reason for them to cut and make to end employment for some employees. That's the nice thing about being able to have an input within your company. These insurance adjusters are trained to make sure that they are always looking at things in the eyes or through the eyes of corporate policy, which unfortunately is not good for you, the homeowner. So as a recap, what is this all about? What am I trying to say to you? I'm telling you that when you have a claim and you've suffered damage to your property, it is important for you to represent it properly to the insurance company to make sure that you get paid on all the damage there. And how do you do that? The average homeowner has no idea what type of damage they have or what the policy covers them for. And that's why a public adjuster can come in there, somebody like me, your friendly public adjuster, and I can represent your policy to the insurance company to make sure that you are paid as completely and fairly as possible. Doesn't that sound like the way you want it to go?